Harvey, good afternoon. This is really a pleasure to have you with us. Great to finally connect. Thanks for
Thank you,
taking the
Francis.
time, of course, taking the time for this podcast conversation. I've been our leaders series. I've been really impressed with Big Rivers Insurance Brokerage, based in Tri-State area, and your unique niche in insuring hard to insure businesses. That's quite a specialty. I also
Yes.
saw your background at Liberty Mutual and BRI and your work with entertainment clients like Eminem, 50 Cent is fascinating. So how are things going today for you?
Things are wonderful. Absolutely
Great,
wonderful.
great.
I just got back from Las Vegas where I was at the Distressed Investors Conference, which is part of the Turnaround Management Association, one of our national events.
I remember. I remember. So the goal for our conversation today is to go over your business, understanding really what it is that you do because it's unique, and share this. You've been 30 years in the industry. What was the driving force behind establishing First River Insurance Group and now Big Rivers Insurance Brokerage?
Not to correct you, but it's 43 years in the industry.
Okay.
I graduated, worked in accounting for 2 years, got my CPA, was not happy with that, and I just fell into insurance, and I've been very happy ever since. So
Wonderful. Wonderful. So explain to us why this niche?
the distress, the difficult,
Yes, yes, yes,
um,
yes.
anybody's old enough they could think of the yellow pages, but anybody could Google insurance broker, and any insurance broker can write a candy store, a restaurant, etc. So I do write those accounts. I do write those. I'm not a snob. I don't shy away. But by writing the more difficult stuff, you isolate yourself or highlight yourself as the go-to person.
I get
So
that. Okay, okay. So in your view, what are the most critical metrics or KPIs that define success for your brokerage firm today? What numbers do you look at on a weekly or monthly basis that tell you the business is thriving and is on track?
I mean, as far as premiums, commissions, and all.
Yeah, your criteria. Yeah,
Yeah,
tell me.
no, criteria. We just, if there's activity, there's activity. There are weeks and months where we're writing three, $500,000 of premium, and then we can go for a month or so when we're writing, very little. It's somewhat secular. The way insurance goes, the property. I deal with 99.9% businesses. Insurance is an annual policy.
Mhm.
So, about 40% of the industry turns on a calendar year basis, but most insurance policies, when you look at it, are when the company itself started, and it rolls on from there. So if you start a business April 20th, that's normally when your policy started, and
Mhm.
then every year it renews April 20th, unless there's a reason you might want to switch.
Mhm. Mhm.
I've had businesses in Florida. They started in the middle of June, and now that's the middle of hurricane season.
Mhm.
You don't
Mhm.
want to be marketing going out to underwriters in the middle of hurricane season.
Sure.
That's when they have the least amount of bandwidth and availability. So those people, I would switch to a calendar year.
Yeah, yeah, yeah.
So, but getting back to the original, our month we can have if you look at what's a great month, you could have a great month and then a slow month, but you got to annualize it.
Mhm. Mhm.
So, but I think what you're asking, our average account is anywhere from 25,000 to $2 million in premium.
Mhm. Mhm. Okay, wonderful, wonderful. Do you want to give us some metrics in terms of how many clients you operate, you serve, or what is your, tell me.
We don't have, at least I don't have any metrics. I just put my head down and we go forward. We have our staff. We make sure that our staff has enough bandwidth to handle the clients that they have. We don't want to be known as a sweatshop.
Sure.
And we write businesses all over the country.
And how many people do you have on staff?
Our staff consists right now of two principals, um, three people who are running the account exec division, and they have people under them. Plus, we have good handful of contractors, salespeople running around the world. Not around the world, but around the states.
The country. You cover all the states. I use tri-state area, but you work pretty much.
Yes, we have clients who are in Iowa. I mean, we have clients. I have a client who their headquarters are in New York, but they have locations in California, Michigan, New Jersey, wherever they have to be.
Mm, mm, mm. So you've been 43 years, right, on the market, in this industry. So you've seen a lot going on, and you probably see a lot going on still today. Looking at the broader insurance landscape, particularly from your niche of private equity portfolio companies, what major shifts or trends are you observing these days?
Well, market is very fluid. It's what we go into what's called a hard market or a tight market, where what happens is very simply you have hard markets and soft market. A hard market, it's a seller's market or the insurance company's decision, and they'll give less coverage for more premium. And when a hard market changes, becomes a soft market, the underwriters and their management team have been told, get us business. So they will broaden the coverage and lower the prices to be competitive to get the business in for a lot of different reasons.
Got it. And that's a soft market these days, right?
That's a soft market. Correct. I was in a soft market, and I was in a soft market. I had a nightclub, and we had all the bells and whistles, and the premium was very affordable. The hard market came, and all of a sudden, I had to go back to my client and say, we don't have assault and battery coverage. And we looked all over the markets. I'm a broker. I'm not an agent. I've been an agent. When you're an agent, you only have one company to represent. When you're a broker, if company A is not willing to do something or they want more for it, I can go to the other companies. So this one time became a hard market, and the company that was writing them, this nightclub, refused to write assault and battery. And I went to half a dozen or a dozen markets, and at that time, nobody was writing it for this type of business. So I made him aware of it, explained it to him. We had it in writing. He ended up having an assault and battery claim. He had no coverage. And if you have no coverage, you don't have defense costs either. It's an absolute exclusion. And then again, as the market gets softer due to industry situations, more companies are willing to go into it. And in order to attract premium, they will offer these additional bells and whistles, or in some cases, necessary coverages.
Got it. So you've been kind of answering my question. So how these impacting businesses in terms of risk assessment, coverage needs, or even client acquisition and retention strategies. So how does it affect your business, in terms of acquisition, retention, coverage needs, with all the fires, like, the waters, the floods. Tell us more about,
Basically, we work with every client as they come. So everyone, there are times we're writing a large restaurant chain in New York City, and we have a difficult time getting, for example, liquor liability insurance. And then we can get it, but the cost is not is somewhat prohibitive.
Yeah.
So I've always said there's always someone willing to write the coverage, but at what price?
So what I'm hearing is you're very flexible for one, you're very open to all types of policies, but you have this specialty around distress business. Tell us a bit more about that distress business insurance practice, because that's not something that's known by most of us. So that would be great if you were telling us what it consists in. You explained to me when we first got
Well,
together. I know
in
now,
the
but for our
80s,
audience.
in the 80s, we were writing asbestos abatement contractors when no one else could. We had the carriers, we had the program. What I've gotten involved in now for the last 18 years is a company, a group called the Turnaround Management Association. So these are professionals who work with companies that are in distress. The distress could be they're losing money. They're not making enough money. They're not meeting the covenants of the banks that they deal with. So the way it works, the way I see it working, is it starts off where going concern is doing well for whatever reason. There are 1,000 reasons or 1,000,000 reasons. Business is not where it was. So the banker basically says, "We love you, but you're not meeting your covenants. So we have a choice. We could pull the loan. We have a bad loan, and you're out of business." Or would they give an option? They say there's these people, turnaround managers, interview these three turnaround managers that we're comfortable working with. They'll never tell you exactly who to go with, and let them come in and do an analysis. And they come in, and these are part of the group I work with, and they'll look at a business individually, and they could say, this location is not doing well. You have to close it. You have to do this, recommendations. And they also report to the bank.
Mm.
And there are times where the business is just underwater. So at that point, they can get a bankruptcy attorney who specializes in again, a bankruptcy attorney, as my favorite attorneys have said, you don't have to be bankrupt. They can also help you with your stresses that you have. They can help negotiate your loans and the like. But if you're getting to the point where the tax man is driving down the street, is about to put a sticker closed, you file Chapter 11. Chapter 11 is many different chapters. Is for business is a reorganization. Everything stops. All loans, bills, expenses stop. And then you put together a plan. You meet with the United States trustee, because it's a federal situation, and at which point the trustee and the attorneys and the turnaround people figure out what and if can be done to maintain this business in what I call, back to my accounting days, a going concern.
Mm-hmm.
So, and it could be everything from you see a lot of companies like Rite Aid and the like, Saks Fifth Avenue. They file for Chapter 11, and now I'm getting out of my comfort zone, getting into turnaround or distress. They can renegotiate and get out of leases. So you might have 40 locations and 12 of them are not doing well, dragging down the others. So if you file Chapter 11, you can negotiate that, get out of a lease. And then once you get out of Chapter 11, I'm really giving a very short Reader's Digest version, you start over.
Mm-hmm.
And you can agree to pay those past debt creditors 20 cents on the dollar, a dollar on the dot, whatever it might be. And then you start fresh.
Mm-hmm. Mm-hmm. So where do you come in? And do you work with those big organizations like Saks or
Uh, I
CVS?
have. I'm not involved with Saks. Where do I come in? Go a step further. What happens is a lot of times a business is doing poorly and they file for Chapter 11. They meet with the U.S. trustee, and the U.S. trustee just asks a couple of questions. Are your payrolls up to date? Are your payroll taxes, sales taxes up to date? And do you have insurance? And quite often they say, yes, yes, but we didn't have the money. We don't have the insurance.
Mm-hmm.
And the trustee says, if you can come back in 7 days, and either with you have insurance, and if you can't get insurance, then we're going to have to dissolve you. We're going to convert to a Chapter 7, where basically the trustee takes over the operation, and I don't use the word fire sale, being a insurance person, but they just sell everything they can to pay off all of the creditors with whatever they can.
Mm-hmm. Mm-hmm.
So
Okay. That's interesting. So thank you for this. It's a digest, but that gives us a good mapping of where you operate, how you operate. And so then my question for you, you've been successful for the 3 years, you're at this niche, you're known, you're part of conferences, you preside some chapters. So from your perspective now, in this fast changing marketplace, what is your vision of the future for your company? What's your next level? And what's the strategy to overcome potential hurdles, obstacles to win at the game that you set up for yourself?
All right. Well, we're in an expansion mode currently. Oh, really, we're always in expansion mode. But we're in expansion mode. I was just named the president of the New Jersey Turnaround Management Association chapter.
Yeah.
And that allows me and my firm a lot of exposure. Again, I was just in Vegas at the national conference, and it's the kind of situation when I meet people from Chicago. I was with somebody from Chicago. I was with somebody from Illinois, all over the country coming for this. And that's why I go there. And they'll say, "What do you do?" And when I explain it to them, they say, I've never had that. I don't know anybody who could do that. It's what we do. And again, I was at one event where somebody came to me and says, "You can write insurance on a vacant property in Chapter 11." So I said, "Okay, if you say so." I'm not going to argue, but I've written it in this event. I've written it for 4 different individuals, companies. At which point he said, "Well, I won't mention names. A very, very large national broker couldn't do it, and their current broker couldn't do it." And the answer is, the larger broker doesn't want to get involved in it unless they're big, big telephone numbers and commissions.
Mm-hmm.
The smaller broker doesn't have the experience. So our strength is that I've dealt with, I've found, and I've trained the underwriters that when I tell them someone's in Chapter 11, they don't close their file and say next. They know what we've done. We've got a good track record.
Yeah,
so we're growing that. And the other thing that we do a lot of, there's also, because I'll just go into, we do property casualty insurance. So that's fire, liability, business auto, workers' compensation. The very, very big exposure these days is cyber insurance and the like. The other thing is the professional liability. There's a coverage called directors and officers. So it provides protection for accusations of bad management or bad decisions. So when a company goes into Chapter 11, their directors and office policies almost always stops because it's change of control. They need a new D&O policy while they're in bankruptcy. We write a lot of that. We write a lot of, there's chief restructuring officers. Yep. So they'll come into a company and restructure, the equivalent of a turnaround person, but they basically take control. So the turnaround person comes in and is a passenger in a car saying, "Go left, go right, go left, go right." We recommend, whereas the chief restructuring officer takes the wheel and says, "This is what we have to do." And they want coverage to make sure that if somebody comes in, many times I explain to people, when you buy insurance from me, you're buying defense costs. Francis did something wrong to me. He caused me bodily injury or property damage, whatever the case may be. Now you got to, your corporation has to be defended. Okay. And again, when the director and officer comes in, a chief restructuring officer comes in, someone can accuse them of paying one company over another company, et cetera, et cetera. It's a defense costs. And if there is a payment, it's paid out. So that's what we're doing. We're growing big into that.
So you're in expansion, right? And you are in a market where there are more and more opportunities, I suppose. Some companies go out of business. We see that in retail and will keep going because of the AI changing so much the landscape. So building on this very resilient business that you have and this expansion curve that you're on, if you had a magic wand and you could fix one thing inside your company, River Insurance Group, so that you can, or Big Rivers Insurance Brokerage, so that you can expand even further and faster, what would be the one thing that you'd like to fix?
The only thing we could fix is hours. There's not enough hours in the day. And you could easily say I'm the outside face of the firm. And my partner, Jeffrey Pearson, is the inside face.
Yes.
So he's working with the insurance carrier. I bring the information in, we work it together. And again, I always say he's much smarter than me, but I'd say I'm smarter because I'm with the smartest guy on the street. Um, but we know where to go and what to do. So the only thing it's just hours and energy.
So then, of course, that leads us to the big conversation on everybody's mind today and lips. How do you see AI helping you with hours, with the challenge of not enough time?
Well, there are companies who have approached us, and I've even looked at what they had, and it was pretty good. They could take an insurance policy, put it into their system, analyze it, and give us a breakdown. So that can be good. I just can't trust it. So it's just like any AI. Too many attorneys have used AI, and the AI was using inappropriate or made up information. So basically, it's a matter of what we do for AI. AI allows us to do our analysis quicker
Mm-hmm. Mm-hmm.
versus having to my partners who have to who will take the policies apart and manually put things together. There are a couple of AI programs that we've purchased where we'll take the current policy, put it in there, and then tell us this, and then we use that as a guide. We will never use that as an exclusive
Mm,
because they could say something is there and it's not and all that.
of
So
course.
and and the other thing that we do, I do a fair amount of consulting for what we do is I consult for the lending industry. I review the insurance of the borrower on behalf of the lender.
Yeah.
Because one thing I'm adamant about, too many people, too many lenders, too many people will depend upon a certificate of insurance.
Mm,
And
mm,
I say certificates of insurance are worthless. If you look at the top, there's a disclaimer that basically says it. So it doesn't list all the um, limitations and exclusions, etc. So that's what we say. And one of my taglines are the big print giveth, the small print taketh away. So it says that you have this coverage in bold letters, and then there's endorsement G2 that goes, oh, we're not giving that coverage, or we're limiting that coverage to only $50,000. So, and the best example I could say, for a cyber policy, there was a coverage that was $1 million. But then there was an endorsement that said, if you don't do this, this, and this, it drops down to $50,000.
mm, mm.
So, Francis, you're running your business on the assumption that you've got protection, and there's a little bit of a fine print that goes, you haven't maintained your patches on your computer program, so we're reducing the coverage by $250,000, or we're removing the coverage. So, getting back to your original question, AI is a help; it's a starting point, but I still think that, and I hope, I hope that you always need the human being to review it and make sense of it, and then also find ways to correct and to use and to negotiate with underwriters.
Sure, sure, sure. They offer lots of different services, but that's for another conversation. So, but have you seen in your industry insurance firms of your size, pretty much, do things that were really catching your attention that you thought like, wow, that's provocative. That seems to be really a competitive advantage. Have you seen this around you yet, or?
Not real. To be, not to brag, but not haven't really seen anything like, wow, we have to do that.
Okay.
You know, not yet. And if they do, I always take advantage and learn. You can always
Yeah.
learn from somebody and everybody.
Sure, sure, sure. Well, thank you very, very much for bringing this wealth of expertise and experience. I can't wait to see your expansion, in this market. And this amazing platform that you have now with the New Jersey chapter that you're leading. That's an amazing achievement. Congratulations. And maybe we'll have you back on the speakers, leaders series, Master AI Disruption with us as, AI evolves and you have more comments to make about it and sharing with us the success of this expansive phase that you're in. Congratulations. That's quite impressive.
Look forward to it.
Well,
Thank you.
Thank you, Harvey. This is the end of our podcast today. Thank you.
Thank you. Okay. Bye-bye.